Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Bernoulli. Today we have Ronald-Peter Stoeferle and Ira Harris. Ronnie is partner at Incrementum AG and responsible for research and portfolio management. He has been with the Erste Group in the past, where he published his first In Gold We Trust report in 2007. Over the years, the Gold Report has proceeded to become one of the benchmark publications on gold, money, and inflation. And in 2014, he co-authored the book Austrian School for Investors. Also in 2017, The Zero Interest Rate Trap. And Ira is an independent trader, successful hedge fund manager, global macro consultant trading foreign currencies, bonds, commodities, and equities for over 40 years. He was also CME director from 1997 to 2003. Welcome, gentlemen.
Thank you, Richard. Glad to be here. Great to be here with Ronnie.
Hi, Ira. Hi, Richard. Great pleasure being here. Thank you very much for the invitation.
Excellent. Yeah, so I thought we'd focus the first part of the discussion on the new edition of In Gold We Trust report. And perhaps, Ronnie, if you could give us a summary of this year's report and the major themes.
Well, the summary probably is going to take like 2 to 3 hours because the report is quite a brick. Actually, there's tons of inflation when it comes to our reports. This year, we hit a new all-time high with 230 pages. So it's quite a long, extensive analysis of all different angles of the gold space. I think that the three main takeaways are that we're seeing that the tide is turning in monetary policy. We're going from a quantitative easing environment to a quantitative tightening environment. It's not only the Federal Reserve that is becoming more hawkish, it's also most of the other central banks, although with some sort of time lag, that try to get out of the quantitative easing mode. And, you know, in the last almost 10 years, central banks created 14 trillion, so 14,000 billion US dollars out of thin air. Of course, this had an effect. This inflated the everything bubble. And therefore, I think that people vastly underestimated the consequences of quantitative easing. From my point of view, they also vastly underestimate consequences of quantitative tightening. So this might sooner or later crash the credit-induced boom and might also lead to a recession sooner or later. The second key takeaway is the turning of the tide of the global monetary architecture. The de-dollarization is happening. It's a long process. I think we've seen many milestones in that process in the last couple of months. Of course, with the oil contract in Shanghai, many bilateral agreements between mostly emerging market nations, completely circumventing the US dollar and making or invoicing in their own local currencies. And of course, those emerging markets are also big buyers of gold, not only the central banks, also private investors in those countries. And the third point is the turning of the tide in technological progress. I think that we're seeing extremely interesting developments in the crypto space. Of course, we know lots of that is rubbish and won't be around in a couple of years. But I think that gold and cryptocurrencies are actually friends. They're not enemies. I think they're kind of complementary rather than opponents. And we're describing quite a lot of interesting new applications combining the oldest form of money, physical gold, with the new technology. We also got two interesting exclusive interviews with the nephew of Friedrich August von Hayek, Richard Zundrich, who is telling us what his uncle, Friedrich August von Hayek, who already wrote in the 70s about a competition in currencies, what he would say about the cryptos. And there's another fantastic interview with Luke Roman talking about the de-dollarization. Of course, we also cover financial repression, we cover inflation, mining stocks, a technical view of the gold market. So, as I've said, it's quite an extensive read, and we are very, very happy that it's such an enormous success worldwide. We've got more than 500,000 downloads already.
Wow.
We've been featured in 50 countries all over the globe. So I think it was really worth the effort.
Yeah. I mean, let's delve into the three themes you mentioned a little bit more to get your thoughts, both Ira and Ronnie there. So on the change of tide in monetary policy, the reversal from QE to QT, let's start with Ronnie. How do you see that in terms of the effects on gold prices and the financial markets?
Well, I have to say I really admire Ira because he's such a keen follower of everything what central bankers say and write, and I would just get too frustrated of all that central bankers
Okay.
non-opinions. Let's put it that way. And I'm covering those developments more from I'd say from a broader perspective. But I think, talking about QT in the US, it's going to be 420 billion this year. It's going to be 50 billion starting in October. It will be 600 billion next year. So that's not peanuts. That's really a significant amount of money. And as I've said, it's not only the Federal Reserve. I think sooner or later, also the ECB will have to become slightly more hawkish. And the big question, of course, is as the other central banks are so much behind the curve. The big question is, what are they gonna do as soon as a recession hits? From my point of view, there's quite a lot of signs that recession is on the horizon. At least we're seeing, of course, rising rates. We're seeing QT, as I've mentioned. We're seeing record high consumer confidence. We're seeing an M&A boom. We're seeing rising default rates, but also rising write-offs on credit card debt. We're seeing that consumption rates are kind of weakening at the moment. Very importantly, we're seeing the yield curve that is flattening and that might invert in a couple of months. We're seeing strongly rising private and public debt ratios. We're seeing oil prices rising significantly. I mean, it's 50% higher than 12 months ago.
Yeah.
So from my point of view, there's actually quite a lot of recession signs already, and it's the second longest economic expansion. So why shouldn't a recession happen? Don't get me wrong, from my point of view, a recession is something normal, something positive. But we all know what central bankers will be doing if the bad R word is happening. So they're really scared of a recession. They will implement fiscal and monetary stimulus, and that's basically the reason why gold is doing very, very well in the course of recessions. We crunched the numbers, and on average, in the last couple of recessions, gold was up 20%, which is a great performance, not only on a relative basis, but also on an absolute basis. So, if you want to hedge for a recession, I think gold is a pretty good idea.
And Ira, your thoughts on that first theme of the reversal from QE to QT, effects on gold prices and the financial markets?
Well, as we've discussed for quite a while, and I certainly agree with Ronnie, that there's an asymmetric relationship in the financial world that people just don't want to admit to, which is the Fed will cut interest rates by 100 basis points in one fell swoop but they and the rest of the central bank world only raise in very small increments. That's the Greenspan legacy. Quarter point. To me, it's meaningless. If you really want to get ahead, raise by what you would cut. But it shows that they're terrified of disinflation, deflation, which they assume will come with a recession. Just like they look for inflation during times of expanded growth, they always look for deflation during times of slowdown. Well, and I agree with Ronnie that, that's why gold will perform well. Everybody says, well, there's no inflation. Not an issue of inflation. It's what central banks will do to halt the onset of a recession. And I agree, recessions are all part of the capitalist model of finance and economics. That, hey, you get a robust period. People borrow money to chase after some entrepreneurial endeavor. Profit margins get squeezed. All the borrowing results in overcapacity. The overcapacity leads to shutdown, and the shutdown leads to recession. It's the way, it's the Austrian school of debt. That's why the first place I look is to debt. So whatever the fears of debt, and that's what the central banks are scared of, because they know that in times of, if they allow prices to fall, which may be good for certain people, it'll be disastrous for those who are carrying huge amount of debt, especially governments. And now we know corporations are borrowed to the max, as in the United States, our individual consumers. So all of that prevents them from allowing a downturn in prices, and that you should keep everybody long some amount of gold. Again, the only time I will turn short-term negative on gold is if short-term interest rates actually have a positive real yield of 50 to 100 basis points. Right now, they're still negative, by any measure of acceptable inflation. And if you go to Europe and Japan and Britain, there's substantially negative real yields. So that's why I always say, whether you want to own gold in dollars, fine, but regardless, own it in terms of all fiat currencies, because they're all pursuing the same ridiculous policies that should have been ended long ago. But they all fell in love with their own models and their own ways of curbing what they believed was an economic slowdown. So that's where we exist. So my hat's off to Ronnie and his group for putting together this work, because it's dead right on target.
And the second theme, Ronnie, in terms of the monetary order and how central banks are looking at gold. So do you see a larger return for the role of gold in the international monetary system? And could you elaborate on that, how gold will play a major role in the multipolar monetary order of the future?
Yeah, of course. I mean, our one of our main views has also always been that the next crisis will really be a currency crisis, and I think that I'm not 100% sure if the dollar will be the ultimate safe haven in the course of the next crisis, and we have seen that already in this kind of mini crash in January, beginning of February. I think it was really interesting that this typical safe haven move into US Treasuries and into the dollar didn't happen that time. So actually the US dollar weakened during that couple of pretty volatile days. I think that's a very important takeaway. So we all know that the Chinese follow a very long-term strategy. I mean, their favorite game is Go, which is a very strategical game to play, and we're seeing that for many years now. They're setting so many different agreements with commodity producers, with important countries, mostly in the emerging markets, to circumvent the US dollar, to do their pricing in Chinese yuan terms, etc. So I don't think that the renminbi will be the world reserve currency next year or whatever. But I think that the best time for King Dollar is coming to an end, and of course we know that there's huge fundamental problems in the US. Just have a look at the Congressional Budgets Office forecast for the next 10 years when it comes to US deficits. They are seeing more than 1 trillion every year in the next 10 years, so a cumulative deficit of 13 trillion in the next 10 years, under the assumption that there will be no recession in the US. I think that's kind of naive to think that there won't be any recession in the next 10 years. So therefore, I think the deficit in the US will be significantly higher. And this is also one reason why I totally agree to Ira. We just cannot afford dramatically rising real rates. The whole world needs negative interest, negative real rates, and that's just a great environment for gold. Now, when it comes to the petro yuan, the Shanghai oil futures that were introduced in March, I think it's quite astonishing that the Western world doesn't really realize that. I think it's interesting that the volumes traded are enormous, and I also think that when it comes to oil, it seems that there's only very, very few people being bullish on oil, although the price of oil is rising. Technically, I would say that's just a beautiful uptrend, and I think that Russia plus the OPEC, that they also said that they are ready to work together with our partners to overcome the excessive domination of the limited number of reserve currencies. That's something that Vladimir Putin just recently said. I think this de-dollarization is happening, and therefore I think it was actually no coincidence that the first official trip abroad of Donald Trump was to Saudi Arabia. I think they're really scared that one of their biggest allies, Saudi Arabia, is leaning more towards the Chinese. So it's a very, very complex topic. There's so much going on every day. And therefore, I just can recommend everything that Luke Roman writes. And we're also glad that we've got this great interview with him in the report, because he sums up those topics very, very well.
Interesting. And your thoughts, Ira?
Well, let me pick up with Ronnie. And Richard, we've discussed this, but I had put out a blog piece October 4th, 5th, talking about exactly this, that there was a landmark event when the Saudi king actually went to Moscow. And that was, if you look, that's when the oil put in its bottom, because I was doing a live audience with somebody, and everybody there was bearish oil. And I said, I understand the supply-demand curve, what it looks like right now, but it was the day that the podcast was that day. It was a live remote. And the Saudi, I said, but the politics have just shifted, because for the first time ever, the Saudi king went to Moscow. So I agree with Richard. There are things afoot here. And Putin understands this. Putin understands his role. And the United States can talk about sanctions, but Putin is in the driver's seat here. He controls the levers of the Mideast. Will he make Iran expendable to placate the Saudis? There's so many things going on with that. So he could ramp up political turmoil, or he can quiet it. So I think that when we look over the next 6 months, the United States, maybe sooner, will back off from sanctions because they're going to get Putin to get involved in certain things where he could be very persuasive on the world stage to get things done. And a lot of it stems from oil. You saw it last week. You know what? The price of oil dropped $5 when it was the Saudis and the Russians who said, well, maybe we can increase production going to the OPEC meeting. It shows the leverage that Putin has. So anybody who discusses these sanctions and ramping up sanctions on Russia, I think is ridiculously naive and is not paying attention to what is actually going on in the world stage. So that is a major importance. And I agree more with Ronnie when he talks about, of course, the oil yuan contract and the Chinese. The Chinese are trying to move away from a dollarization of the international economy.
Yes.
And I think gold certainly plays a big role in that. Because they've been stockpiling gold, as the Russians have. So let's go back to an earlier statement about Bitcoin, when Ronnie was talking about Bitcoin or any other type of cryptocurrency. And I think that cryptocurrencies and gold are friends, because it wouldn't surprise me to see a ruble gold blockchain type of currency in order, because that'll move everybody. There's an article in the FT today very negative about the SWIFT and the way the United States is able to express their will, enforce their will through the SWIFT system of monetary transfers. Well, that begets moving not from Bitcoin, because again, Bitcoin is a nice technological thing. I find blockchain very interesting, but I think blockchain works very well for gold. And if I can just finish with this, Richard, you've had Bosco on from Bosco Korevichuk from Windsor, who's actually put together a thing where you'll be able to hold gold as a blockchain in your name, in your own place, whether it's at Brinks or anywhere else, and you'll be able to access it. The blockchain is, I can't agree with Ronnie more, blockchain actually is a very good conduit for bringing gold into a greater role in the world.
Yeah, and that brings us into number 3 theme, Ronnie. Can you elaborate on what's happening in terms of gold-based cryptocurrencies, what that trend is?
Of course. Well, I have to say that in our team we've got Demelza Hayes from the US. She's doing her PhD on cryptocurrencies. She was just named one of the 30 under 30 by Forbes. So she really knows a lot about what's going on in the crypto space, and we also have this cryptocurrency report, which is the sister report to the gold report. But I'm seeing it more from I would say, philosophical point of view. I think in general competition is great. I think competition is just I mean it's the best thing for every market participant, for every consumer, and Hayek already in the 60s asked the question, why shouldn't be competing currency also be good for people, and I think the fact that cryptocurrencies are entering the main stage now, and I think before 2017 nobody was really taking it seriously. But 2017, when Bitcoin rose from $1,000 to almost $20,000, this was the moment when central bankers and politicians realized, okay, that might be some sort of competition for our system. If this will go on, this could have enormously negative consequences, because people will just lose trust in fiat money, and will abolish currencies like the euro and the dollar. So actually gold is anti-government money, and Bitcoin is also anti-government money. And I think if you read the white paper by Satoshi Nakamoto, he of course understands gold He understands the stock to flow ratio. He understands some sort of a natural deflation, and he also understands the Austrian School of Economics. So therefore, I think the development in the crypto space is something extremely interesting to follow. As somebody just interested in economic developments, but also as an investor. I think that the fact that young kids are discussing money again. Is Bitcoin money? Is it better money than the euro? Is it better money than gold? I think that's a very, very important thing. And
yes.
if you go to these conferences, you only see very young people that are, they really want to innovate. They want to change the world. They're only seeing opportunities. While if you go to a traditional finance conference, you only see people that are kind of seeing threats and risks all over, and are always blaming, regulators and financial market authorities and competition and so on. So for me, it's really refreshing that there is something coming up. Now, when it comes to gold, I know that many people in the industry regard Bitcoin as some sort of enemy. From my point of view, it's competition. Of course, the whole crypto space is still pretty tiny compared to the market cap of gold, gold is slightly more than 7 trillion now. Cryptocurrencies are at, I think, 350 billion. So that's fairly small, but of course it changed quite a lot in the last couple of months. But I think those applications coming up, combining physical gold and technology, I think this is something that might really have an impact. Because if you talk to millennials, for them, in Austria, for example, you just go to the bank and buy some gold coins, like the Philharmonic gold coin or whatever. For them, some of those kids, they have never been in a bank. They don't need a bank, and therefore I think it's just unrealistic that those young kids will go to a coin dealer and buy physical gold. But if it's in a kind of a modern, kind of sexy way that they can allocate in
gold-backed,
physical gold, I think that's appealing. Therefore, I think that we don't know what will happen, but there is interesting projects coming out from the Perth Mint, but also from the Royal Canadian Mint. They're teaming up with kind of fintech companies, and let's see how it's going to turn out. But I'm pretty positive about those developments.
Yes, on the millennial generation. Yes, absolutely. And let's move to a discussion on what's happening in Europe. Seems like total chaos in Italy. Will Italy take down the Euro project? Starting with Ronnie. What are your thoughts?
Well, I think chaos is kind of normal in Italy.
Okay.
I don't know. Is your last name Bonulli? Is it Italian?
Yes, right.
Okay,
Okay. That's okay. It's okay.
No, I mean on average in the last couple of decades they had one new government every year. So I think political turmoil is quite normal. But what I think is more interesting is we had this kind of change not only in Italy but also recently in Spain and last year in France. So I think those three countries are actively voting against this austerity policy, this kind of German-led austerity policy, and that's of course going to have a huge impact on the whole project of the euro. Therefore, I think it's really interesting that people and financial market participants they're getting so used to those things, they just don't care about it anymore. Although I have to say that many of the statements by the politicians in Italy, they're pretty worrisome, and of course sooner or later the Eurozone will either blow up or the purchasing power of the euro will be weakened significantly. So yeah, we'll see how it's going to turn out. But for the time being, there's definitely no panic over here in Europe.
I see. And Ira, your thoughts, and also how this relates to what you've recently written on will the German electorate acquiescence in providing the financial wherewithal to create a harmonized fiscal system and the Eurobond to compete with the U.S. Treasury market?
Yeah, because ultimately it just comes down to this. It's what has been written by Bernard Connolly and others, and Ambrose Evans-Pritchard has been covering it really well in the last month. But that's really what it's all about, because if the Germans don't guarantee the credit of the entire EU, it's just not going to work. They did this backwards. They created the euro because they were in a hurry, because they thought they would bind everybody together rather than putting in the right political and economic foundations. Because, first of all, the Germans would probably have not gone as far as they did. Once Maastricht was passed, I think, in 1991. And so they got the Germans in with the euro and these agreements, but there was no superstructure to make it happen. So now they've gone backwards, and now they're being forced to do this. And the German people are balking at it and going, well, what's it going to become? We're going to be a transfer union. And what they're going to try to do is to get Germany to transfer its current account surplus basically to all those who are in deficit. And will the German people go for it? Well, that to me is the operative question, because you're still left with this. Whose currency is it? Is the euro the German currency, or is the euro the Italian currency? Well, if it's the Italian currency, it needs to be devalued every so often, just like the lira was. It was a way for Italy to correct its bad economic policies.
Yes.
But we're not there. So it's a real struggle. And what Draghi has done, why I make him to be a very dangerous man, because he's gone about and built up that ECB balance sheet, which if he's sitting here, I'm very skeptical about the whole G30 construct. Most people don't even pay attention to it. But the fact that there are private hedge funds and traders and investors who sit with the world central bankers to discuss, very sensitive issues, it always bothers me, and it evidently bothered the ombudsman in Europe, because they were calling Draghi to task for it. It got dropped because the politics of it were just bad, the political optics. So they let it go. But there's some very serious issues here. And what they're hoping to do is, this is the George Soros plan, which is, hey, build up that balance sheet. It's all based on sovereign debt, on the capital key that the ECB is by law supposed to operate at. Fold them all into one, and you got a euro bond. And now the only question is, yes, the ECB has a printing press, but ultimately the quality of the bond and whether investors will accept it is whose credit stands behind it. If it's only the Italian government, we know that answer. If it's the French, very tepid. But if the Germans are willing to stand behind the entire debt edifice that has been built up, then you know what? Then that'll work until they get to the next crisis. But right now, the politics are very shaky, and we are in very dangerous ground. And if I can expound on that too, then you got to look at what Vladimir Putin's looking at. Putin has his own designs here, and he's going to try to break pieces of Europe away from the center of it, and try to find some very simpatico relationships with Russia. To we see it in Italy. And we certainly with the Germans, because we don't know where Gerhard Schroeder is. But these are very dangerous times, and I agree with Ronnie that the market is grown so complacent, nothing seems to bother it. Okay, I agree, and I'll keep trading that way until the market is all of a sudden starts to get bothered by things that we are talking about right here.
And your thoughts, Ronnie?
Well, yeah. The thing that bothers me most, or that concerns me most, is that there's actually when the next recession hits, and of course that's outrageous to talk about recessions these days. We have this wonderful chart in our report about the Bloomberg survey. They're asking the 78 most influential economists, probably having like 8 PhDs from Ivy League schools and IQ above 500. I don't know. They're asking them about their economic forecasts for the US. And what would you say out of those 78 economists, how many do see a recession in the next 3 years? Give me a guess.
Oh, how many see a recession in the next 3 years?
Yeah,
maybe 10%.
No, zero. Nobody.
Okay.
Everybody, there's such a strong consensus that in the next 3 years we're gonna see kind of Goldilocks scenario between 2.2 and 2.6% growth. That's a strong consensus, and that makes me very concerned because it shows that everybody is kind of positioned that way. I think nobody is really kind of hedged for a recession that might be on the horizon. So if there is going to be recessionary scares coming up, this will have enormous consequences for asset allocations. And I think that gold obviously should be doing well in that environment. But the thing is, in the course of the last couple of recessions, on average, the Federal Reserve lowered rates, I think, by 500 basis points. Of course, they've got more room, more leeway at the moment than the ECB. But still, if they would lower 500 basis points, they would be in deeply negative territory. The same for the Eurozone. If they go into negative territory, and I cannot really rule that out, because that's also what Ken Rogo, for example, what he recommends as a tool for monetary policy in the next crisis. If they go into deeply negative territory, that's going to ruin the banking system, of course, yeah, and that would have enormous consequences. It was basically be the end of capitalism as we know it, yeah, of the last tiny bit of capitalism. So that concerns me quite a lot, because central banks just don't have any. They painted themselves into a corner, and there's just no way they can get out of that. So sooner or later, I think there will be a currency reform. I don't know if SDRs will be the kind of solution, but I think that's what Jim Rickards, who's on our advisory board, he always says, if you want to play poker with the big guys, you have to bring chips to the table. And those chips are golden. And I think it's no coincidence that the US is still holding 8,000 tons of gold. Of course, we've got all those discussions, is Fort Knox empty and so on? I don't think so. We've got, in the Eurozone, we've got more than 10,000 tons of gold, which is valued mark to market on a quarterly basis, which is really interesting from my point of view. We've got the Chinese buying gold. We've got the Russians buying gold like crazy. Actually, the ruble is one probably has got the highest gold backing. I think their M1 or M2 monetary aggregate is backed by gold at more than 50%. So it's no coincidence that all the important players, that they're having lots of gold, or that they're constantly buying gold. Because I think if there's going to be a currency reform in the course of the next crisis, gold will play a major role.
And finally, your thoughts, gentlemen, in terms of potential next steps and what's happening in Europe. Ira, you've written about the potential for the next president of the ECB to be Bundesbank President Jens Weidmann, because the German voters will be averse to backstopping the ECB without a greater sense of control. Your thoughts on that?
Yeah, you know what? Back in 2011, 2012, when I blogged about this, I had accused Merkel of making a great mistake by backing off of having Axel Weber as the head of the ECB, which was a big part of the discussion. But then, if you remember, we had Merkozy, you know, the close relationship between Merkel and Nicolas Sarkozy, and Sarkozy bested her, and they got Mario Draghi basically as the compromise, because the French were totally opposed to having a German run the ECB. And I thought back then it was a giant mistake, because with Europe set to go into crisis, I mean, anybody could see that they were in a crisis. Jean-Claude Trichet was a terrible head for the ECB. He couldn't have made more missteps. But the Germans would be more comfortable with a German in charge. And everybody's just got to get over themselves and say, hey, if we want this to work and we want the Germans to come along here, we need for Europe to have faith and the Germans to have faith in the ECB. Right now, I think they're very skeptical. And Weidmann has been quiet for the last 18 months, because I think Merkel told him to be, you know, that's my supposition, to be quiet, you know, to lay low. But now all of a sudden, in the last 4 or 5 weeks, he's getting vocal again as to, you know, his stance on certain things and what he's opposed to. So, but I think it would behoove Merkel. This is one victory she needs. She needs to get Jens Weidmann as the head of the ECB, because the Germans, I think, then will have to reassess about how they look at this whole project. And I think it's a very, very important step. Nobody else. There can't be. Oh, you know what? We had Wim Duisenberg, so we had a Dutchman. They would say that, but I would argue that Trichet was probably more German in his sense of banking, because we go back to, of course, 1991, 92, when he was the head of the Bank of France and instituted Le Fort Franc, in which he squeezed in order to keep the French franc in the tied to the Deutschmark. So yes, we've had sound money, but I think the Germans need to see a German at the head of the ECB.
And your thoughts, Ronnie?
Well, yeah, I hope to see Jens Weidmann as the successor of Mario Draghi. I'm not 100% sure, but on the other hand, I don't think that he could change the strategy of the ECB. I don't think that there's really going to be some sort of a hard money guy that would kind of appreciate that it's just possible at that point of time that such a hard money guy really becomes the head of an important central bank. I think at least compared to me, they're all very, very dovish. They're all very socialist, probably. They do not question the whole Euro project at all. I mean, there's a good reason why the ECB built this enormous tower in Frankfurt that I think costed like 200% more than they thought initially. There's a good reason why the European Central Bank tries to get as much competences as possible. So I think nobody is really questioning this Euro project. What I can tell is if you as a German go to Greece, you're gonna have a hard time. So that's something that I really criticize. I don't think that the euro is really a project that unites Europe. I think unfortunately it rather divides Europe, and that's something that we have seen in the last Euro crisis 2011, and probably in the next one that might be about to start. With Italy now, and of course Italy that's completely different dimensions compared to Greece, for example. That's definitely not a project that unites Europe, and that's something that unfortunately nobody really talks. For everybody, it's a given that we've got the euro, and if you criticize the whole setup, you will get a really hard time over here.
Okay.
Well,
yeah, go ahead.
Let me just. So the Italians understand exactly where they're at, and if you ask me, I would say that Yanis Varoufakis is very much an advisor to them, explaining to them what he had to go through in Greece. So I like that Ronnie brings that up because it's a very important thing, and Varoufakis was the one who saw it, front and center, and of course they got rid of him fast possible, but they haven't been able to silence him. So he's out there speaking, and the Italians understand what they have here and why they have all the leverage, because they can't afford for the Italians basically to default or force a restructuring of that debt, because that would be a major deflationary impact on the EU. Yeah, because that's an enormous amount of debt, which would curtail bank lending, and banks are the backbone of the European financial system, not corporate debt. They're trying to build the corporate debt up, but they've been slow because there just hasn't been that much economic activity. So I think Ronnie's point is very important, and the Italians, again, you have to people who minimize Italy are making a grave mistake, because the Italians, they're not going to play the game, and they know they're not. They're much more important than Greece is to the entire global financial system, not just to Europe, but to the entire system.
And I think sorry, just one
sure.
small thought. I think we should be following the developments in Turkey quite closely. What's going on over there with their banks, with the Turkish lira? By the way, gold is hitting new all-time highs in Turkish lira terms basically every day. I think what's happening over there is it might really be a big threat for other countries, because if you look at the exposure of especially Italian but also French banks with Turkish banks, this might really become an issue going forward.
Can I just respond with that, Richard?
Oh, yeah. Go ahead. Yeah, absolutely.
I think that's such an important point. I have a blog piece that I've been thinking about writing about the three most dangerous people on the world stage. Most people would say Trump, but I would say to world stability, the three most dangerous people are Putin, and I don't necessarily mean that in a negative way, by the way, but Erdogan and Draghi. I saw Draghi. But I think that point about Turkey is very important. Yes. And what makes it even more important is because of the NATO agreement and the collective action clause, Article 5 of NATO. And that puts Erdogan in a very dangerous seat, because he has also the ability, like Putin, to ramp up hostilities in the Mideast at any time. And now what will that do with the U.S. and the fact that Turkey's part of NATO? If there's war, will the United States have to come to the aid of Turkey? And it's a very important question. And the more economic uncertainty and the more turmoil in Turkey, the more dangerous Erdogan becomes.
Yeah, absolutely agree. Absolutely.
Well, great. This has been a fascinating discussion. How can our listeners learn more about your work, Ronnie?
The report is available on our webpage, ingoldwetrust.li, which stands for Liechtenstein. It's no coincidence that our company is based in Liechtenstein. It's in the center of Europe, although it's not a member of the European Union or the Eurozone. It's one of the most interesting countries all over the globe, I would say, run by the Liechtenstein family, who knows the Austrian School of Economics and who treats their as they say, their clients, their taxpayers very well. So all our reports, like this report, but also the last 11 reports, can be downloaded completely for free on our webpage, ingoldwetrust.li, and you can also subscribe for our research products like the advisory board, where we've got quarterly meetings with Jim Rickards and other special guests, and also the crypto research report, and it's all for free. And also, of course, you can have a look at our products. We're managing 5 funds at the moment, and we're also doing private wealth management.
Great. And Ira?
As usual, Richard, you find me at, you go to Ira Harris, YRAHARRIS.com, and Notes from Underground will come up. And if you're not a subscriber, you can subscribe, and it's for free. And the discussions that take place on the blog when I do publish, which is probably anywhere from 2 to 5 times a week, are very high level. And again, we don't tout trades. We discuss where we think the world's focus is on any one time. When if you're a long-term trader, it fits you, and if you're a short-term trader, it also, you can find great, I think, nuggets of ability to act upon. So that's how you find me.
Excellent. Then we'll end it there. Thank you very much, both Ira and Ronnie there, for all the discussion. It's been fascinating.
Thank you very much. It's been a pleasure. Thank you, Richard. Thank you, Ira.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.